Hello, Chattards. How are you? How was your Sunday? Enjoyed? Sir, what enjoyed, sir? IPL is going on in your life? Yes? No? Yes, sir. Shall we move ahead? Yes, sir. Now, Chattered, in the previous class, we had done question number 1, if you remember. In the previous class, we had done question number 1. In this class, we'll do question number 2. Correct? Incorrect? Correct. Ring Limited was registered with a nominal capital of rupees 10 lakh. Question number 2. Ring Limited was registered. You want to take a pick? Ring Limited was registered. Question number 2. 1, 2, 3, 4, 5. Now, yes, this chapter will get over today. Ring Limited was registered with a nominal capital of rupees 10 lakhs. Wonderful. Divided into equity shares of rupees 100 each. So 10 lakh is the share capital divided into shares of rupees 100 each. So 10 lakh divided by rupees 100 is how much? 10 lakh divided by rupees 100 is rupees. Is 10,000 shares? Yes or no? So 10,000 shares. 10,000 shares of rupees 100. The following trial balance is extracted from the books on 31st of March 2023. Building 5,80,000. Where will building go? PPE. But what you are supposed to prepare? You are required to prepare statement of profit and loss. Statement of profit and loss for the year ending 31st of March 2023 and balance sheet as on that date. So statement of profit and loss and balance sheet as on that date. Correct? Now charted. PP. So you are supposed to prepare PL as well as balance sheet. You are supposed to prepare PL as well as balance sheet. Now building 5,80,000. Building 5,80,000 charted. That will go where? So that will go as PPE. Very good. That will go as PPE. Thereafter machinery. How much is machinery? 2 lakh. Where will 2 lakh go? So that will also go as PPE. Closing stock. Closing stock is given in trial balance. Oh my God. If closing stock is given in trial balance and opening stock is also given, then charted, you remember, adjusted purchase is equal to purchase minus closing stock. If closing stock is given in trial balance, but opening stock is not given chartered, then adjusted purchase is equal to purchase minus closing stock plus opening stock. Do you remember this note? So which note? This is your balance sheet. This is your PL account, PL account, PL account era. This you had done the example. You remember? If in trial balance closing stock is appearing and opening stock is also appearing, if in trial balance closing stock is appearing and opening stock is also appearing, then adjusted purchase is equal to purchase minus closing stock. We had done this example. And if in trial balance closing stock is appearing and opening stock is not appearing, then adjusted purchase is equal to purchase minus closing stock plus opening stock. Am I clear? Why adjusted purchase is equal to purchase minus closing stock? Because charted over here purchases, out of these purchases only closing stock is left of 30,000. If I want to show trial balance my closing stock, if I want to show closing stock in trial balance, then I have to remove that from purchases. So once again, purchases is how much? 1,50,000. Closing stock is how much? 30,000. This 30,000 is left out of purchase only? Yes, sir. So if I write closing stock in trial balance, don't you think it will be accounted twice? If I write closing stock in trial balance charted, it will be accounted twice. Hence, we write it in adjustment. So this 30,000 is already part of opening purchases, yes or no? Yes, sir. Now charted, but if I want to write closing stock in my trial balance, I have to remove it from my purchases. So I showed purchases 120 and closing stock 30. That means adjusted purchase is nothing but purchase 150 minus closing stock 30. Are you able to recall? Tell me yes or no. Are you able to recall? Yes or no? Yes, sir. We are able to recall everything. Now, and if I include opening stock also, then adjusted purchase will become 50 plus 120, 170. Correct. This example we had done in detail. So if in trial balance closing stock is appearing and opening stock is also appearing, then adjusted purchase is equal to purchase minus closing stock. But if in trial balance opening stock is not appearing, then adjust purchase is equal to purchase minus closing stock plus opening stock, because opening stock is also included in adjusted purchase. Am I clear? Purchase was how much? 150. Out of which closing stock is how much? 30. Out of which closing stock is how much? 30. Remaining 120 is known as adjusted purchase. So purchase minus closing stock is adjusted purchase. If opening stock is not appearing separately, that means in adjusted purchase we have included opening stock also. If opening stock is not appearing separately charted, that means in adjusted purchase we have included opening stock also. Acha. Correct? हाँ sir. Yes, yes. Now, so closing stock is appearing in trial balance. That will go where? Inventory. That will go where? Inventory. Then loose tools. Loose tools will also go in inventory. Purchases is adjusted purchase. Now tell me, can you see opening stock in trial balance? No. Since 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 opening stock is not appearing, since opening stock is not appearing, since opening stock is not appearing in trial balance, therefore adjusted purchases is equal to purchase minus closing stock and purchase minus closing stock plus opening stock. Clear? Yes, no, yes. Now charted. Now charted. Correct. Salaries. Where will salaries go? Salaries will go in employee benefits. Salary will go in employee benefits. Directors' fees. Directors' fees, directors' remuneration. Tell me charted where it will go. Directors' fees, directors' remuneration. Tell me charted where it will go. So directors' fees and directors' remuneration will go in other expenses. Very good. Directors' fees and directors' remuneration will go in other expenses. Rent will go in other expenses. Depreciation will go in depreciation. Depreciation will go in depreciation. Bad debts will go in other. Investment 2,40,000. This is non-current investment. If nothing is mentioned, what we'll assume? Long-term investment, short-term investment. If nothing is mentioned, charted, we'll always assume long-term investment. Interest accrued on investment. Interest accrued on investment. What is this? Interest on accrued on investment is income. Are na bapu. Interest accrued on investment is given in debit side. Income comes on credit side. This is interest accrued. That means interest receivable. It is an asset. Interest receivable is an asset. That will come where? Other current asset. Other current asset. Interest accrued on investment. Interest accrued on investment, that is other current assets. Yes or no? Yes, sir. Thereafter, debenture interest is finance cost. Debenture interest is finance cost. Now charted, advance tax. Advanced tax, short-term loans and advances. Advanced tax, short-term loans and advances. FC is finance cost beta. Sundry expenses. Sundry expenses is other expenses. Sundry expenses is other expenses. Debtors. Now, Fatafat, tell me what is debtors? Debtors is trade receivables. Debtors means trade receivables. Bank is how much? 60,000. 60,000 will go where? Bank will go where? Cash and cash equivalent. Sales will go where? Revenue from operation. Revenue from operation. ठीक है ना? Outstanding expenses. That is other current liability. Outstanding expenses. That is other current liability. Provision for doubtful debts. Oh my God, this is old provision. Provision for doubtful debts. Old provision. 6,000. Old provision. Correct. Share capital 4 lakhs. Share capital 4 lakhs. Shares are of rupees 100 each. That means 4,000 equity shares. 4,000 equity shares of rupees 100. General reserve. Tell me. No. General reserve will go under the head. Reserves and surplus. General reserve will go under the head. Reserves and surplus charted. Profit and loss account on 1/4/22. Profit and loss account on 1/4/22. Where it will go? This is opening balance of PL account. Opening balance of PL account. This will also go in reserves and surplus. Creditors means trade payables. Provision for depreciation. That will go in PPE. 14% debentures. 14% debentures. Now charted, 14% debenture is long-term borrowing. 14% debenture, this is interest on debenture accrued but not due. Accrued but not due, that is outstanding. Other current liability. Other current liability. Interest on investment, that is other income. Other income, correct? Unclaimed dividend, other current liability. Unclaimed dividend, what does unclaimed dividend mean? Unclaimed dividend means chartered company has paid dividend, but the shareholder address is not there. We are not able to find shareholders only. So we have sent the check, but the check came back. That means that dividend we have paid, but that is not claimed by anybody. So that money has not gone out from our bank account. Yes or no? Suppose I am company, you are a shareholder. Suppose I am company, you are a shareholder. ठीक है ना? Now I gave you share of dividend. I gave you dividend का check. I gave you a check for dividend. Is that clear? As soon as I gave you check for dividend, it became payment from my side. But when the check did not reach you only, you have not taken out money from my bank account. That means, can I say I have paid dividend, but money has still not gone from my bank account, but it is since it is unclaimed. So if within 1 year you come and tell me, Dipesh, hey Dipesh, my dividend I have not claimed, please give me my dividend, then I will give you that dividend. So unclaimed dividend is other current liability. Closing stock is more than opening stock by 60,000. Now charted. Adjustment number one. Adjustment number one. What it is? Closing stock is more than opening stock. Closing stock is more than opening stock by how much? 1,60,000. Now charted closing stock is given in the trial balance is how much? 1,80,000. So 1,80,000 minus 1,80,000 minus opening stock chartered is equal to 1,60,000. Therefore, opening stock is equal to how much? The opening stock is equal to 180 minus 1,80,000 minus 1,60,000 is equal to 20,000. That means chartered opening stock, I've got it here, and 1,60,000 are subtracted here. So opening stock over here, it became positive, and 160 over here, that is 180 minus 160. So opening stock is how much? Opening stock is how much? 20,000. Closing stock is how much? 1,80,000. Now chartered, this is point number A. Point number B. Adjusted purchase is equal to purchase minus closing stock plus opening stock. Adjusted purchase is equal to purchase minus closing stock plus opening stock. Now, what is adjusted purchase? The value given in the trial balance, meaning 4,20,000 is equal to purchase minus closing stock. Closing stock is 1,80,000, that is given in the question only. Closing stock is 1,80,000, that is given in the question only, 1,80,000. Can you see? Yes, sir. And chartered plus opening stock. Opening stock is how much? The opening stock is 20,000. Very good. So we can say 4,20,000. 4,20,000 is equal to purchases minus 1,60,000. 180 minus 20. 180 minus 180 plus 20 is equal to minus 1,60,000. Yes or no? Yes. Now this minus 1,60,000 will come here. So tell me, chartered, this is equal to 4,20,000 plus 1,60,000 is equal to 5,80,000. Yes, sir. No, sir. Yes, sir. Now my wonderful chartered account. Correct. So adjustment number A is done. Provide for doubtful debts at the rate of 4% on debtors. Achha. Debtors are how much, sir? Debtors are 2,50,000. Now, adjustment 2. Debtors are how much? Sir, debtors are 2,50,000. Debtors are 2,50,000. On that, we want to create a provision of how much? 4%. On that, we want to create a provision of 4%, sir. What is provision of 4%? That means out of this 2,50,000, 4% of 2,50,000, that is 10,000. Out of this 2,50,000, 4% of 2,50,000, that is 10,000. We believe that we will not receive. Are you understanding? Out of this 2,50,000, 4%, that is 10,000 chartered, we believe that we will not receive. That means provision for doubtful debts. That means chartered provision for doubtful debts is how much? Provision for doubtful debts is equal to 4%, is equal to 10,000. Debtors left is how much? 2,40,000. Now, thereafter chartered, PDD account. What is the balance of PDD? The balance of PDD PDD has a credit balance, yes or no? Yes. We had created a provision of how much? 6,000. Opening balance of PDD is 6,000. Yes, sir. From where did you get this 6,000, sir? Over here it is better. I got 6,000 from here. Old 6,000. So we had created a provision for doubtful debt. How much? 6,000. But that bad debt is how much? 12,000. Bad debt is how much? 12,000. So bad debt we subtract. So we'll write 2 bad debt. 2 bad debt how much? 4,000. No. 2 bad debt how much? 12,000 का bad debt. Sir, from where did you get 12,000 bad debt? Charted 12,000 bad debt is here only. 12,000 bad debt is here only. Am I clear? Yes or no? Yes, sir. So 12,000 bad debt is here. Provision for doubtful debt 6,000. Now my wonderful chartered accountant. I had created a provision of how much? 6,000. But there's a bad debt of how much? 12. So 6,000 ka provision I had, but bad debt is 6. 12. So 6,000 I will take out from, or I can say, look at this. How much provision I had? 6. But bad debt is how much? 12. So I have to make my provision how much? Make my provision 12. So I have to increase my provision by how much? Sir, 6. I have to increase my provision by 6. Very good. I, I had a provision of 6,000. There is a bad debt of 12,000. Therefore, I have to have a provision of 12,000. But my provision is only 6,000. Therefore, I need to increase my provision by further 6. So 6 plus 6 will become 12 ka provision. Am I clear? Plus chartered, I want a new provision also. Plus chartered, I want a new provision also. How much? New provision I want of 10,000, yes or no? Yes. New provision I want of 10,000. Oh my God. New provision I want of 10,000. Plus old provision I have to increase by 6. So 10 plus 6. Total I have to increase my provision by how much? 16,000. So by PL 16,000. By PL 16,000. Correct? Yes, sir. No, sir. Yes, sir. Now charted. By PL, how much? 16,000. So my old provision was 6, but bad debt was 12. So I have to increase my old provision by 6. Plus, I want a new provision of 10. Old provision I have to increase by 6 plus new provision I want of 12. So total I want a provision of 16,000. Or charted, you must have done this in your 12th. 12th, mein madam would have taught new provision. How much? 10. Add bad debt, how much? New provision. Add bad debt. Less old provision. Old provision means trial balance wala provision. Old provision means trial balance wala provision. 22 minus 6. 10 plus 12 minus 6, that is 16. This 16 will go in P&L account. New provision is, this one is my new provision I want. That means 2,50,000 mein I am doubtful that 10,000 will be bad debt. That is my new provision. Last year, I had assumed that the provision will be how much? 6. That is my old provision. And bad debt is given as 12. Am I clear? Sir? Oh, sir. Where will this PDD by PL? So PNL it will come as debit side. Yes. PNL it will come on debit side under which head? PNL it will come on debit side under the head other expenses. PNL it will come on debit side under the head other expenses. Am I clear? Yes or no? Yes, sir. Now chartered. Make a provision 30%. That will do it later. Depreciation include depreciation of 16,000 on building and 24,000 on machinery. That means they have already given depreciation. Where it is? Where it is? 40,000. Now, tell me if depreciation is already given in trial balance, that means depreciation is charged or yet to be charged. So if depreciation is given in trial balance, that means depreciation is already charged. Very good. If depreciation is already charged, that means will be subtracted from the asset or it is already subtracted. So if depreciation is already charged, that means it is already subtracted from the asset. Wonderful. Correct. If depreciation is charged, that means depreciation is already subtracted from the asset. Yes or no? Yes, sir. Correct. Now, therefore, depreciation is an expense. Yes or no? Yes. Therefore, depreciation will come where? P&L debit. That is other expenses. But this depreciation of 40,000 ka breakup is what? 16 and 24. And you remember in your childhood, your madam had told items of trial balance will be posted only once. Items of adjustment will be posted twice. So this is depreciation. It is item of trial balance. Therefore, it will be posted only once. Once where? Only PL debit. Am I clear as other expenses? Okay, sir. There, directors declared a dividend of 25%. That is ignore and transfer to reserve that we'll see later. Bills discounted but not yet matured. 20,000. This is contingent liability. Which liability? Contingent liability. Bills discounted but not yet matured. Now I'll tell you what happened. Are you ready? Yes. There is RAM. There is RAM. I drew a bill on RAM. I drew a bill on RAM charted. Clear? I drew a bill on RAM. So RAM is drawee. I am drawer. Okay now. RAM is drawee. I am drawer. Okay. I have written bills receivable. RAM has written bills payable. I have written bills receivable. RAM has written bills payable. Correct and correct. Correct chapter. Now, so no, what happened? Now what happened? I discounted the bill with the bank. Sir, discounted the bill with the bank means you took the money from the bank and bank deducted interest. Yes. I have discounted the bill from the bank. So bank has given me the money. Yes or no? On the due date, I am supposed to pay bank or Ram is supposed to pay bank. Tell me honestly. On the due date, I am supposed to pay bank or Ram is supposed to pay bank. Sir, Ram is supposed to pay bank. Correct. On the due date, Ram is supposed to pay bank. But if Ram does not pay, then what will happen? If Ram does not pay, then you are supposed to pay. Very good. If Ram does not pay, then you are supposed to pay. Yes or no? Yes, sir. Now, understand. If Ram does not pay, you are supposed to pay. But if Ram pays, you are supposed to pay. No. The entire situation. I drew a bill on Ram. Ram wrote bills payable. I wrote bills receivable. I discounted the bill with the bank. Bank gave me money on the due date. Ram is supposed to pay to the bank. If on the due date Ram pays to the bank, life is beautiful. If Ram does not pay to the bank, I am supposed to pay to the bank. If anybody tells me, Dipesh, you are always supposed to pay money on the due date, will you agree? If somebody tells me, Dipesh, you are always supposed to pay money to the bank on the due date, will you agree? No. I'm supposed to pay money to the bank on the due date only if Ram does not pay. I am supposed to pay money to the bank on the due date only if Ram does not pay. So this liability is sure short or maybe may not be. Sir, maybe may not be. If Ram does not pay, then you are supposed to pay. If Ram pays, you are not supposed to pay. That means this liability may arise, may not arise. Any liability which may arise or may not arise is treated as contingent liability. Yes or no? Yes, sir. Understood. All adjustment done. Now what we will do? Now chartered we will prepare. Now, now we will prepare formats. Sorry, in the books of Ring Limited. In the now, in the books of Ring Limited. In the books of Ring Limited. Balance sheet. Balance sheet as on 31st of March 2023. As on 31st of March. Now, particulars, notes, amount. Correct charted now. First is what? First is shareholder equity and liability. Equity and liability. Correct. Now, equity and liability में equity and liability में shareholders fund. Shareholders fund. Now, shareholders fund में charted you have A. Share capital 1. Reserves and surplus. Note number 2. 3 is share warrant not there. 4 is share application not there. Number 3. Number 2. Non-current liability. Non-current liability charted. Non-current liability means in that we have got, don't copy this, LT, BT, BDOP. B is borrowings. Borrowings means long-term borrowing. Long-term borrowings means chartered debentures. Is debenture there in the question? Yes. So we'll write A. Long-term borrowings. Number 3. Long-term borrowings. Number 3. D is deferred tax. No there. O is other current liability. Not there. Other long-term liability. It is never there. P is long-term provision. That is retirement fund, pension, provident. That also we have not seen. That is over number 3. Current liability. Current liability means BTOP. B is short-term borrowing. Any loan which is less than 1 year. Charted, there is no loan which is less than 1 year. You can check also. We have decided what is there. If you want, you can take a pic. We had already decided what is there where. So any short-term borrowings is not there chart. Any short-term borrowings is not there. Now my wonderful chart. T is trade payables. Trade payable is there? Yes. Trade payables. O is other current liability that is outstanding. O is other current liability, that is outstanding expense, yes or no? That is there. Accrued interest 28. Then outstanding expense for unclaimed dividend 10. So other current liability, we have got three items. Five. And short-term provision, we have got provision for tax. Short-term provision. Correct. Short-term provision, that is provision for tax. Now, thereafter chartered, we come on the asset side. Asset side. Ding dong. Asset side में first is non-current asset. Non-current asset में a PPE and intangibles. In that PPE 7. Now that is PIDLO. PIDLO. P is PP, that I is non-current investment, long-term investment. Any long-term investment is there? Yes. Non-current investment 2,40,000. Correct. Now, non-current investment is how much? 2,40,000. Deferred tax, no. Loans and advances, no. And other long-term assets, that is also not there. Then how do you know? Because PI, that is maximum you will have over here. Deferred tax will never be there. Loans and advances, that means we have given loan, that is not there. Because when you are writing also, no, you will come to know which are there or which are not there. And O is other non-current asset, which is never there. That is long-term deposits. B. 2. Current assets. IITCLO. Inventory. Inventories. 8. Trade receivables. Trade receivables is 9. That is debtors. Cash and cash equivalent. Cash and cash equivalent. Then short term loans and advances. Short term loans and advances. Correct. So this is your balance sheet chart. After balance sheet comes PL account. That means statement statement of P&L. Notes and amount. Number one is, sorry, other current investments. Other current assets. Number 12. That is also there. Why? Because chartered we have something called accrued interest. Other current assets over here we have. Yes, no, sorry, Devanshi. Correct. देवांशी ने बता दिया. Otherwise, तो we would have not been able to solve this sum. Now, yes, Aishwarya. Chalo. Now, thereafter charted. First is what? Revenue from operations. And don't you think there would be contingent liability? Number 13. We have got no bills discounted. Yes. So that will be then revenue from operation. Revenue from operation. Number 14. Then other income. Other income. Other income, we have got interest income, no? Then that's all for your income. A. Then chartered expense. Expense में chartered you have expense में chartered you have first is raw material. That is not there. Second is purchases. Stock in trade that we calculated purchase as how much? 5,80,000. Then changes in inventory. Changes in inventory is given in the question. Closing stock is more than opening stock by 1,60,000. Therefore, opening stock minus closing stock is equal to negative 1,60,000. Correct? Opening stock. So changes in inventory is nothing but negative 1,60,000. You want to put a note for your convenience, but if you don't put, no problem, chat. Then charted employee benefits. Employee benny It's 17. Then finance cost. Finance cost 18. Then chartered debtion and amortization. Depreciation and amortization 19. Correct. Other expenses. Other expenses how much? 19, 20. Other expenses is 20. Correct. Now chartered A is income, B is expense. Therefore, chartered profit before tax A minus B less tax. That will give me profit after tax. Correct? So this is your statement of PL. No, 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 no. Chale? So now we will prepare what? Now chartered we will prepare what? Now we will prepare all the schedules. Now we will prepare, sir. Shreyans, tomorrow we will start with ACE. Correct? ACE, accounting standards. Notes to accounts. Now charted notes to accounts. One minute charted. 1 minute. Now charted. Now charted. Notes to accounts. उसमें नंबर हो. Share capital. Share capital में chartered, he will start with what? Authorized capital. Authorized capital is how much? That is given in the first line of the question charted. Authorized capital. Nominal capital is authorized capital. 10,000 equity shares of rupees 100 each is equal to rupees 10 lakhs. 10,000 equity shares of rupees 10,000 equity shares of rupees 100 each. Correct? Yes. Thereafter, issued, subscribed and paid up. Issued, subscribed and paid up capital chart. Issued, subscribed and paid up capital is charted how much? That is 4 lakhs. So 4,000 equity shares. Can you see? Issued, subscribed and paid up capital. 4,000 equity shares of rupees 100 each. That comes to how much? 4,000 equity shares of rupees 100 each. How much? 4 lakhs. 4,000 equity shares of rupees 100 each, 4 lakhs. Is 4 lakhs. Right? So that will come in share capital, 4 lakhs. 4 lakhs. Yes or no? Yes, sir. Then after charted number 2 is what? Number 2 is reserves and surplus. Reserves and surplus. Reserves and surplus may you have got first reserve as what? First reserve, general reserve. Second is PL. Only two reserves. Can you see? First reserve is general reserve. Here it is. Second reserve is PL account. Charted, there are only two reserves. First reserve is what? General reserve. Chalo, chalo, but let's write. General reserve. General reserve. How much? General reserve is 80,000. Now charted in the question it was given that the directors declared dividend of 25% and transferred 10% to general reserve. Transfer to general reserve, how much? 10%. So general reserve will increase 10% of what figure you will transfer to general reserve? Tell me. 10% of what figure you will transfer to general reserve? 10% of profit after tax will transfer to general reserve. 10% of profit after tax will transfer to general reserve. Am I clear? Yes or no? Yes, sir. So now add further. Further, how much I do? Then PL. PL charted. Opening balance. Opening balance of P&L is how much? Opening balance of P&L in trial balance is how much? 50,000. Can you see opening balance in P&L is how much? 50,000. Yes or no? Yes, sir. 50,000. Add current year's PAT. Add current year's profit after tax. Add current year's profit after tax. Add current year's profit after tax. How much? That we don't know. Then whatever figure we get from that we'll subtract. Less transfer to general reserve. Less general reserve is equal to 10% of PAT. Correct. Then chartered will come to know the total, and then we'll come to know the total reserves and surplus. Yes, sir. No, sir. So general reserve add further. Further, I don't know. Then P&L का opening balance add current year's PAT less transfer to general reserve will give us. So you have to wait for this. Now, note number 3 is what? Long-term borrowings. Note number 3 is long-term borrowings. Number 3. Borrowings. Now chartered long-term borrowings may you have 14% debentures, 14% debentures how much? 4 lakhs. 14% debenture how much? 4 lakhs. Very good. That's it. Correct. After that, number 4 is trade payables. Trade payables. Now chartered trade payables. Trade payable creditors. How much? Creditors. Creditors is how much? 1,84,000. Creditors is 1,84,000 chartered. 1,84,000. Now, my wonderful chartered accountants, let's do the total. Oh, very difficult total. Total is how much? 1,84,000. Number 5. Number 5 is other current liabilities. Number 5 is other current liabilities. Other current liabilities may we have got other current liability में outstanding expenses. Here it is outstanding expenses. Outstanding expenses. Here it is 4,000. Then you have got interest accrued on debenture, that is interest on debenture accrued but not due, that is 28. And unclaimed dividend 10. So this is also other current liability, this is also other current liability, and this is also other current liability. So charted other current liabilities, we have got three items. How many items? Three items. First is what? First is outstanding expenses. Then chartered accrued debenture interest. How much? Accrued debenture interest chartered how much? 28. Then claimed dividend. Claimed dividend how much? 10,000. Unclaimed dividend how much? 10,000. So total becomes how much? 4 plus 28 plus 10. 42. Correct. So long term borrowings is how much? 4 lakhs. Then trade payables 1 lakh 84. Other current liabilities 42. Now charted short-term borrowings. Short-term borrowings have to wait. Why? Because that is provision for tax. Provision for tax I will get once I prepare PL account. Provision for tax I will get once I prepare PL account. Correct or incorrect? Yes sir, no sir. Yes sir. Number 6. Short-term provision. Short-term provision. Provision में chartered. Provision for tax. Provision for tax. For that I have to wait. Thereafter, number 7, PPE. Number 7 is PPE. Original cost, provision for depreciation, WDV. Original cost, provision for depreciation, WDV. First is what? Building and machinery. And उसका provision for depreciation is given over here. Correct. Must. So building. Sir, building does not depreciate. And Swami, building depreciate, land does not depreciate. Acha, acha, okay, okay. So building. Building. 5 lakh 80. Provision for depreciation 1 lakh 10. 4 lakh 70. Then machinery. Lakh 1. This is lakh 10. 4 lakh 80. Let's check still. 5 lakh 80 and 2 lakh. And 1 lakh and 1 lakh. Correct. Yes, sir. No, sir. Yes, sir. So chartered total will become how much? 5 lakh 70. Yes, sir. No, sir. Total is how much? 5 lakh 70,000. PPE. Inventories. Number 8. Inventories chartered. Closing stock and loose tools. Closing stock and loose tools. That is given over here. Can you see closing stock and loose tools? Yes, sir. Closing stock and loose tools. Ding dong. Stock and trade. Like 80. Loose tools. Is 46. That is 226. 26 chartered. 2,26,000. Then chartered trade receivables. Number 9. Trade receivables. Now, trade receivables means debtors. Trade receivable means what? Debtors. Debtors is how much? 2,40,000. Provision for doubtful debts is equal to 4% is equal to 10,000. 2,15,000 minus 10 is equal to 2,40,000. Yes, sir. No, sir. Yes, sir. This cash and cash equivalent. Number 10. Written this much. Tell. Now chartered. It is now number 10. Cash and cash equivalent. Cash equivalent. Cash and cash equivalent. Cash and cash equivalent means you have got cash at bank. Last item 60,000. Cash at bank. Cash at bank. Cash at bank is how much? 60,000 chartered. 60,000. This 60,000 will come in balance sheet. 60,000. Short-term loans and advances. 11 is short-term loans and advances. Short-term. Then advances. Short-term loans and advances. Now, chartered short-term loans and advances, maybe we have got one item, and that is advance tax. Here it is. Advance tax, 1,20,000. Yes or no? Advance tax, 1,20,000. Ding, 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 ding. Advance tax. Advance tax is how much? 1,20,000. Advance tax is 1,20,000 chartered. Advance tax is 1,20,000. Ding dong. 1,20,000. Sir. Oh, sir. Then other current assets. Other current assets we have to check. Other current assets. Now chartered. Other current assets you have OCA. Interest on investment accrued 4,000. Interest on investment accrued 4,000. That is only other current asset. Interest on investment accrued chartered. Interest on investment accrued. Interest on investment accrued. Now my wonderful chartered accountant total 4,000. Is other current assets. Correct? Now, after other current asset number 13, contingent liability. Contingent liability. Now, contingent liability is liability which may or may not occur. There is one liability which may or may not occur. That liability is given in adjustment, last adjustment, bills discounted but not yet matured. Bills discounted but not yet matured. Bills discounted yet matured. Bills discounted but not yet matured. How much? 20,000. 20,000, that is bills discounted but not yet matured. Now charted 20,000. This 20,000 we will transfer it to Over here, outside the balance sheet. Number 14 is revenue from revenue from operations. Revenue from operation means sales. Revenue from operations. That is sales. The sales is how much? 10 lakh 40,000. Yes, Priyanshi, 10 lakh 40,000. Now 10 lakh 40,000. Correct? Yes. After that, number 15 is other income. Other income, we have got one, I remember, that is interest income. Here it is. Interest income. Interest on me. Yes. 24,000. Other income. 24,000. Interest on investment. Interest on investment is how much? 24,000. Number 16. That के बाद after other income, changes in inventory, changes in inventory, changes in inventory is changes in inventory is opening stock minus closing stock. Opening stock is how much? Tell me, tell me. No, no, no. Opening stock is how much? 24. Yeah. First, we'll do few accounting standards and then we'll come back to chapter again. First, we'll do, yeah, quite a few accounting standards. Opening stock is how much? Opening stock 20, closing stock 180. Opening stock 20,000, closing stock 1,80,000. That is negative 1,60,000. Changes in inventory negative 1,60,000. 10,40,000 and 24. Revenue from operation 10,40,000 and 24. 10,64,000. Then employee benefits. Employee benefits number 17. Employee benefits started. These employee benefits are how much? Employee benefits my salary. That's it. employee benefits में salary is how much? 1,20,000. Tining, tining, tining. Ding, 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 ding. Salary is 1,20,000. Yes, sir. No, sir. Yes, sir. Number 18. Now charted number 18. Number 18 is what? At 20. Salary is 1,20,000. Then finance cost. Finance cost is debenture interest. Finance cost is equal to debenture interest. Debenture interest. 56,000. Here it is. Debenture interest 56. Can you see 56? Yes, sir. Debenture interest 56. Here it is. 56. So such use sums. These are the only lengthiest sum. See enter. So for any chapter. Yeah. Amalgamation consolidation is bigger, but still not so dragging wala. This is much better. Okay, 56. 56. Then depreciation and amortization. Number 19. Number 19. Depreciation and amortization. Is depreciation on building and depreciation on. Now charted in trial balance depreciation of 40,000 is given. Here it is. In trial balance depreciation of 40,000 is given, correct? But over here charted, but over here in the adjustment it is given. Depreciation included 16,000 on building and 24,000 on machinery. So I have to show the breakup. Breakup. LI expert, yes or no? Yes, sir. How many times you did? Sir, a lot of times. Now depreciation on building. Depreciation on building. How much? 24,000. 40,000. 20 after depreciation and amortization. Other expenses. Other expenses is check. Director's fees, rent, bad debt will not come because that we have considered in provision for doubtful debt. Yes, bad debt will not come. Why? Because we have considered it provision for doubtful debts. PDD will come, which we did in adjustment. How much? 16,000. And sundry expenses 36. Other expenses. Other expenses में chartered. First we will take directors fees. Directors fees. Directors fees is how much? 20,000. Rent. Directors fees, rent. Rent is how much? 52,000 chartered. Rent is how much? 52,000 chartered. Then PDD. PDD is how much? 16,000 chartered. Very good. Then Sundri expense is how much? 36. Correct? 72, 88, 72, 88, and 20, 24. I lakh 80,000. Yes, Shreyansh. Wait. 5 lakh 80,000 minus 1 lakh 60,000. 1 lakh 20,000 plus 56,000 plus 40,000 plus 1 lakh 24,000 equal to 7 lakh 60,000. 56, 120. Lakh 64. Taxes, how much percent? Taxes 30%. 91, 200. Tax will come here. Tax 91, 200. Schedule 6. Note 6. 91, 200. Note 6. That will go in balance sheet. Liability. Three zero four 800. 2,12,800. Ding dong, reserves and surplus. 2 lakh. Total will become 2,62,800. 10% of PAT minus general is 21 to 80. 21 to 80. 41 520. And general reserve has become 21 to 80. Now, chartered, are you understanding? On this, I created 10% general reserve. General reserve is created on current year's PAT. 2,12,800. On that, I created 10% general reserve. And that 10% general reserve has been added to general reserve further. So, general reserve in total has become 1,01,280. 3,42,800. 3,42,800. 3,42,800. 4 lakh. One again 4 lakhs plus 184 plus 42 plus 91 200. 14 lakh 60,000. 14 lakh 60,000. Correct? Yes, sir. Now chartered 5 lakh 70 plus 2 lakh 40 plus 226. 70 plus 240 plus 226 plus 240 plus 60 plus 120. 15 lakh 60,000 chartered. Balance sheet has tallied. Yes, sir. No, sir. This is your PLN balance sheet. चले? And these are all your notes and sheets. Starting till end. Correct, chartered? Yes, no. Yes, sir. Shall we meet after break? Yes or no? Yes, sir. Shall meet after 15 minutes. Hello, chatters. So we have done two full-fledged final accounts का question. One we did yesterday and the one we did in the previous class and one we did today. Correct and correct. Correct, sir. Shall we move ahead? Yes. Now let's do an interesting question. Very interesting question. It has come in examination earlier. Oh, and it's not a lengthy question, but a good question. But before we go into that, let me recap with you this point. Opening balance of profit, opening balance of profit plus PAT of current year minus distribution is equal to closing balance. Yes or no? Opening balance of profit plus PAT minus you distribute to general reserve or dividend will give you closing balance. It is like this only, no? Opening balance plus PAT minus distribution is equal to closing balance. Correct? Or opening balance plus PAT, opening balance plus PAT minus closing balance is equal to distribution. Opening balance plus PAT minus distribution is equal to closing balance, or minus closing balance is equal to distribution. Correct? So we require this. Now, let's do question number 3. Question number 3. Yes, sir. No, sir. Yes, sir. The Articles of Association of S Limited provide the following. Articles of Association of S Limited provide the following. 20% of the net profit shall be transferred to general reserve. Okay. Amount equal that an amount equal to 10% of equity dividend shall be set aside for staff bonus. That means chartered staff bonus is equal to 10% of equity dividend. Staff bonus is equal to 10% of equity dividend. Okay, okay. That the balance available for distribution shall be applied. That the balance available for distribution shall be applied in paying 14% cumulative preferences, in paying 14% cumulative preferences and 20% dividend on equity shares. So 20% of PAT you will transfer to reserve. Amount equal to 10% of equity dividend shall be set aside for staff bonus. Then for distribution of dividend, 14% dividend on preferences and 20% dividend on equity shares. Am I clear? So I've understood. General reserve 20%, staff bonus 10% of equity dividend, preference dividend 14%, and equity dividend charted 20%. One third of the balance available as equity dividend, as additional dividend on preferences, and two-third as balance, and two-third as additional equity dividend. One third of the balance available as additional dividend on preference share. That means whatever balance is left charted, one third will go as preference dividend and two third will go as equity dividend. Whatever balance is left in that preference dividend, equity dividend, preference dividend one third and equity dividend two third. Am I clear? Yes. So again, I repeat, from net profit, you will give general reserve 20%, staff bonus 10%, staff bonus 10%, preference share per dividend 14%, and 20% dividend on equity shares. Whatever balance is left after this distribution, whatever balance is left after this distribution, that shall be distributed between additional equity dividend and preference dividend. Additional preference dividend is one third and additional equity dividend is two third. A further condition was imposed by article that balance carried forward. Balance carried forward means closing balance. Balance carried forward means closing balance shall be equal to 12% on preference share capital after making provisions of 1, 2, and 3. Okay. The company has issued 13,014% participating preference shares of rupees 100 each. Now chartered 13,000 14% preference shares of rupees 100 each. That means, can you tell me what is total preference share capital? Sir, oh sir, total preference share capital will become 13,000 into 100, that is 13 lakhs. And closing balance is equal to 12% of 13 lakhs. 12% of 13 lakhs is my closing balance added. That comes to 1,56,000, correct? Then there are 70,000 equity shares of rupees 10 each fully paid up. 70,000 equity shares of rupees 10 each fully paid up. That is 7 lakh equity share capital. The profit for the year is how much? 10 lakhs. Balance brought forward from previous year is 80,000. That is opening balance. Opening balance 31,000 depreciation in the current year and 80,000 taxation before making an. Calculate additional equity dividend and preference dividend. Now, so charted, what will I understood? I understood, I understood number one, four things. That I am supposed to give general reserve 20%, staff bonus 10% of equity dividend, preference dividend 14%, and equity dividend 10%. Equity dividend 20%. Whatever balance is left after distribution, one third additional preference dividend, two-third additional equity dividend. Am I clear? Closing balance should be equal to 12% of preferential capital. Preferential capital is 13 lakhs. 13 lakh cut 12% chartered. 1,56,000. Correct? 7 lakhs is my equity share capital. Current year का profit is 10 lakh. Previous year का profit is 80,000. Current year का profit 10 lakhs. Opening balance of profit is 80,000. Depreciation 31 and taxes 80,000. Am I clear? Yes. Now chartered. So can I say earning before treatment? Statement in. Statement of field. Earning before interest, tax, depreciation, and amortization. That is EBITDA is how much? Current year's profit is how much? 10 lakhs. This is before depreciation, before tax. Correct? Yes. How much? 10 lakhs. Correct charted? Yes. Now, less interest. Interest is not there only. Then deduction. Then depreciation charted. How much? Depreciation is 31,000 and tax is 80,000. So earning before interest, tax, depreciation and amortization. Then interest, depreciation and tax I subtracted. Once I subtract interest, depreciation and tax started, what do I get? Current year's profit after tax. Profit after tax. How much? 8,80,000. 9,000. Current year's profit after tax is how much? 8,89,000. Now charted. Again I tell you. Opening balance plus PAT minus closing balance is equal to distribution, or I repeat. Opening balance of profit plus current year's profit minus whatever profit you distribute is equal to closing balance, yes or no? And distribute, you can distribute it where? General reserve, you can distribute it as dividend, you can distribute it among employees. Am I clear? Where you can distribute your profit? Three places: reserves, dividend, and employees. So opening balance plus PAT minus, or you can say opening balance plus PAT minus closing balance is equal to distribution. Opening balance plus PAT minus closing balance is equal to distribution. Or you can say PAT plus opening balance minus closing balance is equal to distribution. One and the same. Yes or no? I write again. Opening plus PAT minus distribution is equal to closing, or opening plus PAT minus closing is equal to distribution. Yes or no? Opening plus PAT minus closing is equal to distribution, or PAT plus opening minus closing is equal to distribution. Yes sir, no sir. Yes sir. So PAT I have got plus opening minus closing. If I do, I will get what? Distribution. Let me check. Opening plus PAT minus distribution is equal to closing. Okay. Opening plus PAT minus closing is equal to distribution. Okay. PAT plus opening minus closing is equal to distribution. Okay, okay, sir. Understood. Very good. Therefore, PAT plus opening balance. Balance of PL. Opening balance of PL is given as how much? 80,000 a year. Balance brought forward from previous year opening balance is how much? 80,000. Less closing balance, that is 12% preference share capital of 15 lakhs, that is 1,56,000. Correct. Closing balance is equal to 12% of preferential capital. Preferential capital is how much? 13 lakhs. Preferential capital is how much? 13 lakhs. Chartered 12% of 13 lakhs is how much? 1,56,000. Therefore, amount available for distribution of dividend is how much? Amount available for distribution is how much? Available for distribution is equal to 889 plus 80 minus 56 is equal to 8 lakh 13,000 is equal to how much? 8 lakh 13,000 charted. Is this clear? Yes or no? Yes. Now, this profit is available for distribution of dividends, staff bonus, all that. Now, and reserves. So, less general reserve is 20% of PAT. 20% of PAT. 20% of PAT. That is how much? PAT is how much? 8 like 89. 889 ka 20% chartered. Correct. 177,800. 77,800. Correct? So that will give you you're left with 35,200. From this 635,200, I will give less preference dividend. Preference dividend is how much? 14% of preferential capital. Preferential capital is 13 lakhs. 14% of preferential capital, that is 13 lakhs. That is 1,82,000. Equity dividend. Equity dividend is equal to 20% of 7 lakhs. 20% of 7 lakhs, that is 1,40,000. Correct? And on equity dividend, we are giving staff bonus. We are giving staff bonus. Staff bonus is 10% of equity dividend. So equity dividend is equal to 1,40,000. 1,40,000 ka 10% is equal to how much? Now, 99,200. Now this is the balance left. Now in the question it is stated that so profit available for distribution was 8,13,000. From 8,13,000 we gave general reserve, we gave dividend, and we gave employees score. And after that, the question says point number C charted. It states that 1/3 balance available as additional dividend on preferential and 2/3 as additional dividend on equity shares. That means this charted will be distributed. This charted will be distributed as additional preference dividend, additional preference dividend, additional equity dividend. If you give additional equity dividend chartered, if you give additional equity dividend, then you are bound to give 10% staff bonus because staff bonus is 10% of equity dividend. Yes or no? So chartered, and balance is to be distributed between preference dividend and equity dividend in the ratio 1/3, 2/3. 1/3, 2/3 को can I say 1x, 2x, 1/3, 2/3. Correct? 1x, 2x. Or I can say 10x, 20x. Sir, why 1x, 2x is better? No. No. 10x, 20x is better. Because staff bonus is 10% of equity dividend. Equity dividend is how much? 20x. 20x ka 10% is staff bonus, that is 2x. Oh. So 299, 200 should be distributed 10x, 20x and 2x, yes or no? That means over here it will become 10 by 32 into 299. 32 how? 10 plus 20 plus 2 is equal to 32. 10, so that is 299, 200 should be distributed in the ratio 10 is to 20 is to 2. Then this will become 99, 200, and this will be 2 by 32 into 299, 200. And this will come to chartered 93,500 187,000 and 18,700. Therefore, additional preference dividend question says calculate additional preference dividend, that is 93,500. Additional equity dividend, that is 1,87,000. Understood, chatting. There is another way which is little lengthier where I would take X. So first what I did EBITDA, I found out PAT. Opening balance plus PAT minus closing balance, I will get distribution. From that distribution, I gave reserves, I gave dividend, and I gave staff bonus. Whatever was left, that I distributed as preference dividend and equity dividend. And if there is equity dividend, there has to be staff bonus also charted. Yes or no? Yes, that's what I did. Good question. No? Yes. Now charted. There is one more thing we need to study. That is companies' dividend rules. Now, let me write down. Dividend dividend of general reserve. Now, what does it mean? It means that Companies Act said that dividend should be paid out of profits, yes or no? Dividend should be paid out of profits, yes or no? And second is whenever you are paying preference equity dividend, you are supposed to pay preference dividend also, yes or no? Whenever you are paying equity dividend, you are supposed to pay preference dividend also charted. Now understand rules for dividend out of general reserve. That means dividend should be paid out of profits. Yes, no, yes. Dividend should be paid out of which profits? The current year's profit. If current year's profits are not sufficient, can we pay dividend out of past year's profit? Yes. Can we pay dividend out of past year's profit? Yes. Provided we fulfill these rules. Rules state that whatever can we pay equity dividend out of past profits? Yes. Past profits means general reserve. What are the rules? Conditions. Condition 1. Rate of dividend which you are declaring should be less than the average rate of dividend of preceding 3 years. That is common sense started preceding 3 years may average rate of dividend was 12%. That means whenever there was profit, we were giving dividend 12%. In the current year, when we are in loss or we do not have sufficient profits, we should give dividend less than 12%, more than 12%. So less than 12%. That is what the law is saying. That the rate of dividend of current year should be less than average rate of dividend of preceding 3 years. Average rate of dividend of preceding 3 years. Preceding 3 years, average rate of dividend is 12%. But current year dividend should be 12 or less than 12. Am I clear? If current year dividend is 12% or less than 12% charted, then you can pay dividend out of past profits. That is general reserve. Second, the amount of dividend which you want to pay out of general reserve. The amount of dividend which you want to pay out of general reserve should be charted less than equal to 10% of paid up share capital and general reserve. Acha. So you want to pay a dividend of 12 rupees, suppose. You want to pay a dividend of 12 rupees chartered. That means this 12 rupees should be less than 10% of share capital plus reserves and surplus. That means if share capital and reserves and surplus should be minimum 120. That means 120, 10%, 12 rupees you can pay, yes or no? Yes. Because minimum subscription is 90%. No, that means minimum 10% you can pay. Subscription still will remain 90%. Am I clear? Yes or no? Yes. So what is the first condition charted? First condition is that the rate of dividend for the current year, charted should be less than equal to Average rate of dividend of preceding 3 years. Second condition, amount of dividend which you want to pay out of general reserve. Amount of dividend which you want to pay out of general reserve should be less than 10% of share capital plus reserves and surplus. Then charted balance left in reserves and surplus. Reserves are suppose 100 rupees. You paid general reserves and dividend 12. So balance left in general reserve is how much? 88. This 88 should be greater than 15% of paid up capital. 15% of paid up capital. That means basically the company wants that you should not erode your capital. Am I clear? Yes or no? Yes. Three conditions. Rate of dividend should be less than the average rate of dividend of preceding 3 years. Amount of dividend which you are paying out of general reserve, amount of dividend which you are paying out of general reserve should be less than 10% of share capital plus reserves and surplus. General reserve left after payment of dividend. General reserve left after payment of dividend should be greater than 15% of paid up share capital. Am I clear? Yes, no, yes, sir. Chalo, condition. Rules for dividend out of general reserve, that is past profits. Excuse me. Condition. Condition 1. Rate of dividend should be less than average rate of dividend. Rate of dividend should be less than average rate of dividend of preceding of preceding 3 years. Correct? Condition 2. Of dividend out of general reserve, amount of dividend out of general reserve should be less than equal to 10% of paid up share capital plus general reserve. Paid up share capital plus general reserve. Condition 3. General reserve minus general reserve minus amount of dividend out of general reserve. So general reserve minus the dividend which you have paid. That means leftover general reserve should be greater than equal to 15% Paid up capital. General reserve minus amount of dividend out of general reserve should be greater than 15% of paid up capital. No. Correct. Question number 4. 1 we have done, 2 we have done, 3 we have done, 4. Now charted question number 5 and 6 we'll do after AS 13. 5 and 6 we'll do after AS 13. Correct. 7 we have done, 8 we have done, and class up is all over. Chart. But this is what it is. Nothing more is there only in company final account. This much you solve, you're done. Inadequacy of profits during the year ended 31st of March 2023, XYZ Limited declare a dividend of 10% of general reserves out of general reserves from the following particulars. Ascertain the amount that can be utilized. Ascertain the amount that can be utilized from general reserve according to the company's declaration of dividend of reserves 2014. So we are supposed to find out how much dividend we can pay out of general reserve. Share capital, preference share capital, equity share capital, general reserve, only general reserve required. Net profit 3 lakhs. General reserve 25. And rate of dividend is 12%. But we want to give it how much? 10%. So no problem. First of all, let us find out what is the amount of dividend which we want to pay. Correct? Yes, no. And find out what is the paid up share capital. Write down number 1. Paid up share capital. Paid up share capital. That is equity share capital and equity share capital is 80 lakhs. Preference share capital is 17 lakh 50,000. 17 lakh 50,000. 97 lakh 50,000. Amount of dividend amount of dividend out of general reserve. Amount of preference dividend. If you give equity dividend, I'm supposed to give preference dividend, yes or no? Preference dividend ka rate is how much? 9%. I'm supposed to give preference dividend 9% of preferential capital. Chartered preferential capital is how much? 17 lakh 50,000. That comes to 1,57,500, yes or no? Yes, sir. The amount of equity dividend Equity dividend, we are giving 10% of equity share capital. That is 10% of 80 lakhs. That means, chartered, we want to give a total dividend of how much? 9,57,500 is the total dividend we want to give, yes or no? Yes. Out of this total dividend which we want to give, first we will use what? Previous year profit or current year profit? So obviously, first we will use previous year's profit. Very good. Previous year profit is how much? Sir, 3 lakhs. So, less out of, this is total dividend. This is the total amount of dividend less dividend out of current year's profit. Profit का symbol is pi. Current year's profit. Profit का symbol is pi. How much is the current year's profit charted? 3 lakh. So 9,57,500 is the total dividend we need to pay, yes or no? Out of the total dividend which we need to pay, 3 lakhs will pay out of profits only. Current year's profit. That means, chartered, dividend year of 657,500. Correct? So this is the amount of dividend we want to pay out of past profit, that is 6,57,500. Now we will check the conditions. If the conditions are satisfied, then the company can pay dividend. If the conditions are not satisfied, are you understanding here? If the conditions are satisfied, company can pay dividend. If the conditions are not satisfied, company will not pay dividend. Correct? Incorrect? Correct. Chalo, but let's check the condition. Condition number 1. Rate of dividend should be less than equal to average rate of dividend of last 3 years. Correct. So that means rate of dividend is how much? 10% is less than equal to 12%. Therefore, condition satisfied. Condition satisfied. Correct. What is condition 2? Condition 2. Amount of dividend out of GR should be less than 10% of paid up share capital plus general reserve. Oh, yes. How much dividend you want to pay out of general reserve? We want to pay 6,57,500 out of general reserve, yes or no? We want to pay 6,57,500 out of general reserve. Correct or incorrect? Correct. So 6,57,500 should be less than 10% of paid up share capital. That is 97,50,000 plus general reserve, that is 25 lakhs. So that means 657,500 should be less than 10% of this is 12 lakh 25,000. 12 lakh 25,000. Correct? So condition 2 is also satisfied, that amount of general reserve, amount of dividend which we are paying out of general reserve, amount of dividend which we are paying out of general reserve, my wonderful chartered accountant, is less than 10% of paid up share capital and yes, no, yes, sir. Shall we move ahead? Yes, sir. No. Condition 3. General reserve minus amount dividend out of GR, that is balance left in GR out of general reserve, should be greater than equal to 15% paid up share capital. General reserve is how much? 25 lakhs minus amount of dividend out of GR is 657,500 should be greater than equal to 15% of paid up share capital is 97 lakh 57,000. That comes to that means chartered balance left in general reserve. Balance left in general reserve after dividend is greater than 15% of paid up share capital. Condition satisfied. Since all the three conditions are satisfied, therefore, since all the conditions satisfied, therefore, company can pay rupees 657,500 as dividend out of general reserve. Am I clear chartered? Yes or no? Yes. So with that, we come to end of a wonderful chapter called Company Final Accounts Chartered. Whatever we have done in the class, that is more than sufficient for your examination. Nothing more, nothing less. This much only you need to study, and believe me, this much only there is. There is this much only. Tomorrow we'll start fresh with accounting standards. Then for a few days we'll do accounting standard, and then we'll come back to the chapters. Am I clear? Risha, now accounting standards are really beautiful. You really enjoy accounting standards. Thank you so much. See you tomorrow. The next class with accounting standards. We'll start with the basics of accounting standards. Thank you so much. Bye bye. Take care.